are on the threshold of an explosion in innovation, and crypto is symptomatic of it. The seeds for what is about to happen were planted during the 20 years that ended with the tech and telecom bubble. Those seeds have been gestating for 20 to 25 years, sometimes 30 years, and are now beginning to blossom. And that's not even the right word. They are exploding into existence. So we think there are 5 major platforms, 14 different technologies that are all getting ready to move into the sweet spot of their S-curves. And there are going to be convergences between and among these technologies. So you're going to have one S-curve feeding another, and creating explosive energy and explosive growth. And I think in the crypto space, we're going to see blockchain technology and artificial intelligence converge and cause explosive reactions. So it's pretty exciting success. But if we're right, and all of this disruptive innovation is about to explode, we've been evolving our point of view on Ether. When we started our analysis, we were pretty much, and this was with Chris, Bitcoin was what we needed to understand first, but we were keeping our eye on all of the other assets, and we stuck pretty closely to the thesis, the FAT protocol thesis that Chris's partner Joel Monegro came up with at Union Square Ventures. Which says that the value accrual will take place more at the currency level. And we believe there would be only a few currencies in the world, much like there are today. We thought Bitcoin would be the reserve currency, and we were looking for the other currencies. And Ether was showing up as a very strong second. And I have been surprised at how Ether and the Ethereum network is mushrooming with stable coins, NFTs, decentralized finance. It's clearly satisfying a huge unmet need. One of those needs is yield out there. And we see that in the fixed income markets, the ridiculous rallies that have taken place, taking junk bond yields down to, just a couple of 100 basis points above treasuries. That's kind of nuts. So this hunger for yield is being satisfied by a much more efficient financial ecosystem. And I think many more people are more open-minded to it as well. But clearly, Ethereum, decentralized finance, NFTs have hit a responsive chord. I think bringing the creator community into this ecosystem is, helping it go a little bit viral more quickly than we would have expected. My experience in innovation is when you're onto something early, there are bound to be problems, and when it blows up is when you invest. That's when you really think about the investing. And I'll say, just in terms of Ether and the NFTs and the creator community,
I think with Ethereum, it is a little bit different in that investors have really yet to converge on a primary narrative on how to value ETH. And I think that also has to do with the fact that the narrative is evolving in the same way that Bitcoin's narrative has evolved. One of my biggest breakthroughs in thinking about, how to value ETH, especially compared to Bitcoin, and something that Kathy alluded to, is that, Bitcoin and Ethereum are differentiated enough where they can coexist. And in a lot of ways, it isn't really a zero-sum game. It's a positive-sum game where you're unlocking kind of new pockets of value that otherwise were non-existent. With Ethereum specifically, I think there's a question of Ether as like this natural resource, this digital commodity. And if you think about as the general economy transitions from the physical to the digital world, that Ethereum can command a sizable premium relative to physical commodities. that otherwise Bitcoin could not. And so when you kind of think about oil or coal or kind of general commodities, those are in the hundreds of trillions of dollars in market cap or in value.
Ether is the same thing for indexing a piece of the Ethereum network, which is a digital or decentralized global computer. A lot of people equate Ether to digital oil. So if you want to get into the crypto game, my suggestion is own some Bitcoin, digital gold, and own some Ether, digital oil. And with those, you have most of your bases covered.
I think going through the big volatility bouts as we were just getting institutional interest, May, I think there was a little bit of a pullback, but, I think, and you could see this with Ether, especially, it didn't skip a beat. It didn't skip a beat. It worked brilliantly. Whereas most in the financial world are just saying this, just because they don't understand exactly how it's set up. They're just saying this is leverage upon leverage. This is upon leverage. This thing's going to come crumbling down. So the more times we go through volatility and the network comes out stronger for it, the more credibility it will have and the more confidence investors will have in it.
Bitcoin.
5 years from now, what's it worth?
If we're right and companies continue to diversify their cash into something like Bitcoin, and institutional investors start allocating 5% of their funds towards, I'll just say Bitcoin for right now, because we did that, we framed it for Bitcoin, could be for other cryptos as well. We believe that the price will be tenfold of where it is today. So instead of 45,000, over 500,000.